can I reinvent all of these things for the same price? And the answer is they take advantage of economies of scale.
Okay.
They've got hundreds, thousands, right, of hotels. And so the infrastructure that they've built is incredibly scalable and very profitable for them. But if we were to try and emulate the same, for example, reservation system, right? Marketing, all of these things, it would be a lot more than the 13% that we pay them. Now, as an operator, you have to ask yourself, well, shoot, how many hotels do I need before it makes more sense for me to bring all of these in-house?
You're listening to the Accredited Investors Only podcast, presented by Accredited Life.
Danny, welcome to the show. How you feeling today?
Oh man, I'm ready to rock, baby. This is gonna be fun.
Awesome. Well, you're feeling good, looking good. You got a sharp haircut there working. If people are not, if they're tuning into just the audio, this is a good episode for video too.
Oh man, stop! You're making me blush, Peter. Come on, man.
Loosen things up to get started. So I'm excited about this conversation. I like we were talking about prior to hitting record here. You got a lot of stuff going on and a lot of things to talk about. So let's dive right into it. I always like to hear people introduce themselves, and always curious to how somebody introduces themselves and that kind of thing. So why don't we start with that and we'll see where it takes us.
Yeah, I think that the simple answer is I run a private equity group that does primarily hospitality investments as well as other investments into other alternative vehicles. But our primary focus right now is in hospitality.
Great.
And I've been in the real estate game now for over a decade and made my way into as a principal. Into a hotel group that GMS Ventures, and we were where we have 300 million in the portfolio, and then eventually branched off, started my own firm, Gould Capital, and Gould Capital is the firm that I just shared with you, right? So we are a private equity firm that does hospitality investments and other smaller allocations in other alternative vehicles.
Wow, that's great. So what was kind of your introduction to the real estate world? Did you grow up in the space, or was this something that, I'm always curious to how people get interested in real estate investing? And then my follow-up is going to be, how'd you get to hotels? There's so many different flavors. So just to kind of plant that seed, but how'd you get started?
Yeah, it's a great question. So, I actually got my start in residential sales. And so I started as a realtor in Silicon Valley, and graduated from Stanford in 2013, and like immediately got into real estate. And interestingly enough, I was pre-med at Stanford. Had no one in my family is in real estate. Dad's an engineer. Mom works for the school district. So very little ties to real estate, and just on a whim decided to get into real estate sales, much to the chagrin of my parents, who had just blown $250,000 on a Stanford education. Right?
You don't need the degree for that to get into real estate sales, right?
They're like, you don't even need a GED for that, Danny. What are you doing?
That's great.
You don't even need that, So,
well, what was it? Do you recall? Like, what was there a catalyst? Like, was there something you saw or you read, or like, how the heck did that happen?
So. It's a very long answer, but the short answer is there was a catalyst. Yeah. Okay. Well, the long answer is this: is that I was soul searching for a little bit, as every college grad does or is soul searching at some point in their life, and I went into Stanford thinking I was going to be a doctor, but 2 years into being a pre-med student, I had done, the great thing about Stanford is, you're one of the world's leading medical institutions right there.
Wow.
Right? Stanford Hospital. And there are a ton of internships and, shadowing opportunities and all that stuff available to students that want to participate in that, right? And that are pre-med. So I had an opportunity to peek behind the curtain, and I got to peek behind the curtain, behind the world's best curtain, right? Or one of the world's best curtains, and seeing these physicians and really being able to like shadow them and learn from them and participate in a variety of different fields. I got the sense that it wasn't really for me. I didn't feel like that passion for it. And my thought was like, hey, if I'm going to be dealing with people's lives here on a daily basis, I gotta really like feel like this is the right move for me. And I couldn't see myself getting into it. Also, truth be told, Peter, being a physician can be quite, it could be very heavy, right? And so I got to see some pretty awful things, as a college student, and I'm just, beneath all the layers, right, of hair, there's a softie down there, and I just it was hard. It was hard for me to deal with the human loss and loss of life, or bad news, having to share bad news. Like none of that stuff really appealed to me. I thought, oh, maybe I could get into plastic surgery, but I just I was never really wanted to be a surgeon because my hands aren't like, I don't really feel like I have like the greatest hands. So I don't know. So there were just a lot of things kind of ruminating in my head. I was just like, I don't know if that's really the thing for me. And so I eventually just decided to let it go. But you know how it goes, Peter. At that point, you're 2 years into it. I'm not going to change majors at this point.
Sure.
I'm too committed. And so I got my biology degree and didn't really know what to do with it. And I was fortunate enough to get a gig at my old high school. I went to private high school. So Bellarmine, if anyone knows Silicon Valley, Bellarmine's like awesome. So I went there and because I had gone back during my spring semester, or during my spring quarter, during spring break, I should say, I went back and visited all my old teachers. And one of my teachers recruited me to come teach summer school at Bellarmine. So I didn't need a teaching credential because it was a private school. He's like, yeah, your biology degree from Stanford's good enough. Come over and start teaching. And so he was really trying to recruit me to actually be a teacher at the school, but it was kind of the gateway drug, right? Like, hey, teach here, maybe we could. Okay. But, I had a lot of fun. I also knew that, from an economic standpoint, being a teacher didn't really appeal to me. If I was going to do something, I wanted to, do something that was going to help me make a substantial living. And so with that being said, I was walking my dog one day that summer when I was teaching biology. And, it's just one of those things where real estate, I didn't really choose real estate chose me, because I was walking my dog and I see a for sale sign and I pick up a flyer and, it's a $2.5 million house. And the first thought that crosses my mind, Peter, is how am I ever going to afford a $2.5 million house?
Sure.
Right. As a 18 or a 21, 22, I was maybe 23 at the time. I didn't even know. But as a 23-year-old kid, fresh out of college, of course, you're going to have those questions because back then there wasn't the education that's available online these days, Peter. I mean, it's scary, right? You've got 18-year-olds that are making crazy buku bucks, but like back in even 10 years ago, that really wasn't the case, so things have changed a lot even in the last decade. And I hope today's youth really appreciates that and takes advantage of it, and watches great podcasts like yours to educate themselves and get ahead. But the second thought that crossed my head is, I wonder how much a realtor makes. Someone's selling that house. And so I did the research and everything, and then calculated 6% of $2.5 million, and I signed up for my exam the next day. I was like, that was a lot of money, right?
Sure.
Of course, they don't tell you online like all the different costs associated with being a real estate agent. You got to pay your broker. Yeah. You got to pay taxes. You got to pay for marketing. You got to pay for all this overhead. So it's not really, as lucrative as one might expect it to be.
Sure.
But nevertheless, it is still quite a lucrative gig. But the one thing that kind of predates all of that is I was in Las Vegas shortly after graduation, and I was sitting at the Caesar's Palace Bacchanal Buffet, and I just kind of like looked around, and it was my first time in Vegas as a, over 21-year-old. This was my first time kind of there, like partake in the full experience.
You could participate, yeah.
Yeah, exactly. And I'm looking around and I'm just like, oh my God, I'm going to own one of these hotels one day, and it was just like one of those things but it wasn't like I would like to, it was like, I'm going to.
Yeah.
Right.
Big difference.
And big difference. And I was like, that's a really weird thought. Right. And then this happened before like me getting into real estate and all that thing.
Mm-hmm.
So I was like, yeah, I'm going to own a hotel on the Strip one day. That's just going to be one of the things that happens.
Exactly. It's just a reality.
That's really strange. I don't know, like, call it divine intervention, right? I know
who planted that.
So much.
Yeah, you know how I am with that. But yeah, where did that like who planted that thought? Where did it come from? Just bounced into your head?
Literally, man. Wow. If you've seen the movie Inception, I think, that's pretty much it. So somehow, and it's just been this viral thought in my head that has not escaped me. And as I was building my real estate business, it was one of those things that was always percolating in the back of my head, because my goal was build something that's going to allow me to unlock that next level so that I can get to that hotel in Vegas, right? That's always been my North Star. And so I grew my real estate team. I had, at one point, I had 35 agents working for me here in the Bay. And it was awesome. And then, there were a couple of things that happened in the real estate industry. I saw the writing on the wall that the opportunity vehicle within the residential space was starting to die. And originally my thought process was, I'm going to use residential real estate as the stepping stone to become a hotelier, right? But it was pretty evident to me that like that was going to be a much slower process than I wanted it to be, because I even though they say don't put things on a timeline, you have to give yourself some deadlines, and I knew that like, hey, I had to be a hotel owner before the age of 40, right? And I just looked at my trajectory and I was like, I don't know that that's going to happen if I continue on this, career path. So I made a pivot, and, I would say one of my strengths is networking. And so I found, I met the right people and became a principal at GMS Ventures, which is a hotel group that owns $300 million in hotel assets, mostly Marriott and Hilton properties and some other branded hotels as well, but primarily Marriott and Hilton. And I learned a lot by being a part of that group, and then eventually started my own PE firm, and that's where we're at today.
Wow, there is so much to unpack there, and I am so happy I asked you to give me the long form answer. I mean, because there's so much to that, and so many lessons that I hope people maybe go back and listen, re-listen to that and slow it down and pause it and take notes. I mean, because I think there's so many things around your mindset and actions that you took based off of things that you thought at different times, and then how it evolved and all. I mean, there's so much to unpack there. I don't even know where where to start. I mean, as you were talking, there were so many different questions that popped up through my mind. But I'll ask this one, but it might not be the best one, but you had this image, like that idea was planted in your head, and you ran with it. I think everybody can relate. They've had these ideas, or they have this feeling that they need to do something, and it's kind of like a splinter in your mind. I mean, you can't get away from it. And you acted on it. You know what I mean? Like, you're one of the lucky ones. Not everybody can probably say they've done that, right? Was there any lessons that you learned along the way as you actually started to do it, similar to what you talked about when you started to go down the path of actually seeing what it was like to be a doctor and all, was there anything from the real estate side, especially on the hotel side, that you thought, this this isn't what I expected it to be, or this is I'm curious if there's anything like that in the hotel business, you know what I mean? Like, and clearly it wasn't a deal breaker either, you know what I mean? Like, so if there was, it seems like you probably were able to chug through that, you know what I mean? But whereas on the medical side, there were things that just you felt like this wasn't aligned with the person that you are and all that kind of stuff, and what's going to make you fulfilled in the long term and all.
Well, I think the one thing, the one universal, sort of looking for here, the one thing that kind of ties my entire journey together up until this point is the core business strategy that was present in my real estate business. It was present when I was with GMS Ventures, and it's now present in my PE firms. So I've fallen in love with business. And the amazing thing about hotels in particular is that it is actually the perfect marriage between real estate and business, because it is the one asset that I can confidently say whose value is directly impacted by the business savvy of the operator. Right. So, for example, like multifamily, sure, you have to have some business savvy there, but you have to have great real estate savvy and great real estate strategy. But that's different than business savvy and business strategy, right? Like marketing. Okay. Like, okay, maybe if you've got a really big fancy apartment building, you've got to invest into some marketing dollars. But in the hotel world, there's all of these different operational divisions within the company, within the hotel and within like the hotel management company that aren't present in most of the other real estate asset classes. And so for me, my residential actually set me up very nicely, because most people hear real estate, residential real estate, they're thinking, oh, you're just a realtor, you sell a couple houses. No, dude, I ran a company with over 40 people in it, 10 staff members, virtual staff members as well. And then I had 35 agents working for me. So I had a full-fledged organization that required a lot of operational oversight, right? And so like I learned operations during my time in growing that company, and I fell in love with it. And that's why, like, when I got into the hotel, like when I started exploring hotels, I was like, oh, dude, like the P&L made perfect sense to me. All these different things that like maybe people who don't have a lot of like business background are introduced to it for the first time, might be a foreign language to them. It was very easy for me to kind of like understand the hotel business, because I already understood like business, right? So it's just maybe slightly different words, but it's the same principles, the same guiding principles. And so for me, the real love is business at this point, and all of the different, like, what we're talking about, the PE firm, which of course, like, there's some operational components to that as well. We've got a fundraising side, a side of things, acquisitions, right? So there's all these different, there's all these different systems in play. But for the hotel, for hotels in particular, I really, it was very easy transition for me, I would say, just because of the education that I invested in, right, to kind of like learn the business, but then also due to like all of the knowledge that I had gained by running my own company before that.
Yeah, that's amazing. I was actually going to ask you too, if there was anything that you learned, during the times running the brokerage and all that, how that has helped you, and shaped what you do today and all. And you answered it, but I'll still throw it out there if there's anything else, that's come up, because I always think that's an important thing, especially for accredited investors that aren't coming from the real estate world. They is whatever else. I mean, maybe they're a doctor or an attorney, or work in sales, or executive at some kind of company. You name whatever it is that they do. And I always think, like, you can look at it as like you don't know anything at all. I mean, like, and real estate is completely new to you, or you can look at the skill sets, you know what I mean, that you've learned, you know what I mean, and that and your strengths and things like that, and how they can help you in the real estate world, that kind of thing. Anything else?
So I'll give you a couple here. So the first one that comes to mind is at the end of the day, the best skill that you can develop for yourself, I believe, is sales, because sales kind of permeates through almost every business, right? And in our business, it's sales and it's fundraising, right? Fundraising is sales, I should say, and raising capital requires a lot of sales savvy and marketing, sales savvy and marketing savvy. Mm-hmm. And those are some skills that I was able to develop in a previous, in my previous roles, and they've translated quite nicely into, into what we're doing now. Now, obviously, it's not like a one for one, so it's not like I can just take all those systems and directly plug them in there. Right. But again, it's those core principles, right? And understanding those core principles and how to reverse engineer your target market into the marketing message, right? And then find the channels that are going to affect you, where you're going to be able to effectively reach those people. Mm. And so, so that's one of the things I would say that's translated quite nicely. And then, I would say just being able to be, when you run a company for enough time, you start to be able to discern things, like you become more discerning as time goes on. And so you can just kind of sift through all of the BS a lot faster, right? And typically you're able to spot the winners at a more effective and faster rate, right? So, and by winners, I mean like on the acquisition side of things, when we're looking at deals, I can look at things from a slightly different lens, because, most operators, when they get into that's all they know, right? And so I think one of the unique things that I bring to the table is that I've had experience in a variety of different roles and businesses, even though they've all been within the real estate space. I've been exposed to enough different kind of flavors here to where I can just look at things maybe a little bit differently than other people could. Uh-huh. And it just, for whatever reason, I've felt more confident, I would say, than I would think most other people, just based off my conversations with my other partners or whatever. My ability to discern the winners from the losers, I feel is a lot higher because of my past experience.
I've heard it referred to as, putting in your reps, that it's just, it's consistency, it's the daily grind of looking at what it is that you do. And it's kind of like it's putting to words the development of a gut feeling. It's like a gut feeling doesn't always happen overnight. Like it's like not everyone's always born with that. You know what I mean? Like it a lot of times when people make things look simple, or they just seem to be able to pick, winners from losers, and they move forward with one thing, but don't move forward with another thing. That's actually years of experience and putting those reps in, maybe having mistakes and failures, learning from it, networking, educating themselves in different ways and things like that, that actually leads to that underlying, gut feeling that kind of brings them into this or that, and then obviously I'm sure there's it's kind of, I always like to look at it as like there's the emotional side, where it's like emotionally you could just tell from the story, of the deal and the operators and, all that kind of stuff. And then there's the logical side that tends to back it up. You know what I mean? Like they says, okay, I felt like this, you know what I mean? And now the numbers are showing this or that or whatever. So I'm curious, and I'm sure the listener is too, how do you look at a hospitality investment? I mean, how do you look at a hotel? What are you looking for? Because I think a lot of people, their mindset is they're maybe used to multifamily in some way, shape, or form, or single family, where it's a value add. You know what I mean? They're looking for operational places where they can save money operationally. They're looking for places they can add value, fix this up and it's going to be worth X. I can charge X% more on rent, that kind of thing. Yeah. I would think there's probably a lot of ways that it can cross over, what people maybe know from a multifamily, or that kind of side of the business. And then there's ways that it's different. You know what I mean? So I'm curious to how you look at a hotel deal.
Yeah, a great question, man. And I love that you brought up the multifamily value add because it's the same concept in the hotel space, right? And there's really three main ways to add value. And so I'll go through all three with you right now. And then we can also talk about ground up and everything like that. But, the majority of the deals that we look at are value adds. There are some ground up opportunities that we're looking at. It's just right now with construction costs as high as they are, a lot of these ground up developments are and rates where they're at right now too. The ground ups are hard to get off the ground, but no pun intended. But
I hear the same thing. Like we're on the other side of the country in Philly, and when I go to conferences and things like that, I've consistently heard that over the last couple of years, it's just there's not a lot of a hotel. You don't see it. You don't see new developments in that space happening. And I say that, and there's literally 2 new hotels across the street from me here. But so there's those unique times when it works, But I've heard that as well.
Well, the other thing too, and I don't want to get too far off the beaten path here, but one thing to consider is that hotels tend to trade at higher cap rates than multifamily, right? And so when you're building the same square footage, right? Hospitality versus multifamily. The multifamily is actually like if the business strategy is let's get this developed and then either stabilize it or just sell it off and then let someone else stabilize it, you're going to get a much better return, assuming that construction costs are fairly similar because build multifamily versus hotel. The per square foot cost is not that much higher on multifamily, right? And so you're going to inevitably make more money, building ground up multifamily than you would a ground up hotel. The real play with the hotel would be let's operate this thing and get it cranking. So because if you look at a multifamily versus a hotel, over time in the same market, you could probably generate higher revenues and NOI through the hotel if you have the right business strategy and everything, which would make up for the lack of capitalization rate being higher in the hospitality space, right? So just from a bird's eye view, right? Like, well, what's a juicier ground up development opportunity? Typically, it's multifamily. Right. Unless you plan on sticking through or you plan on sticking with the hotel for the long run. Right. And like really try and stabilize it and get it cranking and then sell it off. Right. So not a lot. There's not a lot of hotel deals that you'll see just like, where there's where they go ground up and then just sell it within a couple of years. Usually these are probably like at least 3 to 5 year holds post construction. Right.
Yeah.
So anyways, but to answer your question from a value add perspective,
you got three
main ways.
Points. Okay.
There's 3 ways. Yeah, there's 3 main ways. So the first way is, what a lot of these multifamily people do, right? They do renovations. In the hotel space, we call it a PIP. So it's a property improvement plan. Now, if it's a branded hotel, like Marriott or Hilton or whatnot, generally these are brand mandated. So the franchises actually insist, meaning they force you, okay, to do these updates to the property. And typically they come due every 7 to 10-ish years. And every time the property transfers ownership, there's usually a PIP due. And so, the PIP is going to obviously add value to the hotel in the sense that you're going to be able to command better rates because the rooms are nicer, et cetera, or at least that's the thought. Right? There are some hotels in major markets that I can think of off the top of my head that have really gone 2 or 3 cycles now without updating and they just keep getting these waivers from the brands because they're so profitable that the brands just kind of turn a blind eye to their requirements. So at the end of the day, the brand's just trying to squeeze as much money as you're right, out of the hotel. And
who normally pays for that?
The seller.
Okay.
I mean, the owner.
The owner, yeah.
The owner. And the owner, if there's no change in ownership, or if there's a change in ownership, typically it's the new owner that pays for the PIP.
Yeah.
Right? And this is one of the reasons that hotels change hands so frequently, is because owners typically don't want to do the PIP. So you think about this, right? You are, as a new owner, you typically are doing some sort of property improvement plan to the hotel. So you're already going to get a bunch of depreciation benefits, but all these things due to the cost seg that take place over the first 5 to 7 years. So your best return on investment is going to be within those first 5 to 7 years because you get additional tax breaks, right? And then once those 5 to 7 years are up, the brand comes calling and says, Peter, it's time to do another PIP. Well, at that point, you're like, dude, like I have no desire to hold on to this property anymore. So this is why you see hotels change hands so frequently, because once the brand decides that they want to do the PIP and they start forcing the seller kind of looks around and says like, well, I'd rather just like let it be the next owner's problem. Right? So this is one of the reasons, not the only reason, but one of the reasons that hotels change hands as frequently as they do. So now, the lenders will require the ownership groups to put 4% typically of the top line revenue into a replacement reserve account. And so that's supposed to cover any sort of PIP, any sort of PIP that comes due or any sort of like maintenance issues that come up. And so that's a thing that's kind of taken out by the lender. So that's not really like it's not like a non-mandatory. It's a mandatory thing, right?
Yeah.
Like that's what I'm looking for. So it's a mandatory thing that you have to do. Now, during COVID, something a lot of people don't like to talk about, right? So I'll give you a little insider secret here. During COVID, a lot of ownership groups tapped into their PIP, into their replacement reserve accounts to make payroll, to pay their mortgage, etc., because they weren't making enough money during the pandemic. And the brands allowed it. But now, the brands just kind of delayed the PIPs over these last couple of years because they knew that the ownership groups were short on them. So now we're in a situation where, we're 5 years post-COVID now, or 4.5 really. And the brands are getting antsy. And so you're starting to see a lot of ownership groups who are being forced to sell really because they don't have the funds available to do their PIP.
Yeah.
Right. Yeah. So that's one wave of like quote unquote distress that we're seeing in the hospitality sector right now, are ownership groups that need to do the PIP that don't have the funds to do it. And there's a big difference between not having it and not wanting to do it, right? Not wanting to do it. There's usually not wanting to do it. Those guys are a lot savvier. They're smarter. They're cunning, right? They know how to game the system. If they don't have the money,
and you'll be able to pick that up on a balance sheet or a P&L, or where's that usually sitting at?
So that's the thing, right? These aren't really these
it's like an official line item typically, because that would give you some leverage, I would think, right? If you're looking at their financials and their reserves are very low, that they might kind of have to sell, right? Or be in a position where they'd very much want to.
The thing is that there's not like the money's getting paid into the reserve account, right? So that part, it's hard to tell. Now the withdrawals and everything, that's something that like maybe on the financials, if you're if you have a really good eye for it, you might be able to pick up on it. Might be hard to find though. If they have a good accountant, if they have someone that's good at keeping the books, it might be because they don't need to necessarily present us with that information.
Gotcha. Yeah.
Right.
Yeah.
But there's other ways to figure out whether or not they're
in a walkthrough, right?
they're feeling the heat.
You could tell if it's just because it's not, they don't have the updates that you would normally see, right?
Yeah. So that's the first way, right? Is to do is PIP, right? The PIP is usually a way to add value to the property. Second is, and same with multifamily, right? Operations. Operations are not where they need to be. Mm-hmm. And same thing with hotels. Now, the thing about operational efficiency in the hotels is that it really drives the value of the hotel, right? And so being able to create more occupancy, right? Or create higher revenue, average daily rate. So the two things that we look at, or the three things that we look at as hotel operators, are average daily rate, right? So that's like the average rate that we're charging on a nightly basis for the rooms that are rented out. Then occupancy, which is just our occupancy percentage expressed over like the course of a year or a month, whatever time frame we're looking at it. And then RevPAR, which is revenue per available room. So that's basically, it's really simple to calculate RevPAR. Occupancy times ADR, right? So it's just those first two numbers multiplied together, and then you get your revenue per available room. And so those are the three things that we look at. Now, as hotel operators, or when we're buying a hotel, we actually have access, if it's branded, we have access to what's called a STAR report. So STAR reports stands for Smith Travel Research. This is what you would consider, or what I would consider, the comps for the hotels, right? So every hotel has to report their numbers to Smith Travel Research, and they're forced to report it through the brands, but also the STAR will only send you the data if you're reporting in. So if you're a non-reporting hotel, then you don't get any of that data, right? Now, why would anyone want to do that? Why would they want to do this? What would be the incentive? Well, you want to know how you stack up against the competition, right? Sure. Like any operator is going to want to know, like, hey, is it just me, or is everyone else hurting? Right? Is everyone else like in the same boat as me? So everyone reports to STAR. Don't ask me how. Like, I don't know like the semantics. I don't understand like what the deals are or anything. I just know that like all the brands report to STAR. And so when when you're in the middle of an acquisition, you're going to be getting STAR reports that show you, hey, what is the average daily rate? What's the occupancy? And what's the ADR? What's the RevPAR for this hotel? And you're also going to get a list of 5 to 7 other hotels in the comp set. And you're going to be able to see the average occupancy, ADR, and RevPAR for those hotels. And then you get to see how you're doing against those hotels. So if we are above 100%, right, on a RevPAR, occupancy, ADR, that means we're outperforming the comp set. It means it's doing pretty well. Yeah. Now, Marriott flag is typically going to do like a lot better. So if a Marriott's just doing 101 or 102 to the comp set, it's actually underperforming, believe it or not, right? Because a lot of the Marriotts that we see will be like 110 or above the comp set, 110% or above of the comp set. Versus like a Wyndham or like a Choice or something like that. Like those are consistently like in the 80s, right? Like in terms of the comp set. Just depends on the comp set too, right? So every I'm giving gross generalizations here, but typically the lower flags will just perform worse, right? Yeah, and so a higher flag's going to perform better, and that's how we gauge operational efficiency. That's in terms of revenues. Then we have to look at the P&L to look at operational efficiencies in terms of like overhead. And as operators, we understand kind of like what the key line items are and what we should be doing as in terms of like percentage wise compared to revenue, right? So if we're saying like, hey, our rooms expenses are at, let's just say 35%, right? And we know for this type of hotel, it should be closer to like 25. Well, that's 10%. That's a massive, there's massive upside potential there, right? Even if everything else checks out, we see, hey, there's a 10% difference here in what we know we can achieve as a group versus what these guys are doing. So of course we have to ask the questions like, hey, why is the room's expense so high? Like, give us a breakdown so we can see like, is it labor? if it's a union hotel, for example, we ran into this one time where, you know, the union costs were just made the hotel like unbuyable, basically. We're like, hey, like this doesn't make any sense. And even though the rooms expense was a lot higher than we expected it to be, after really, you know, parsing through the numbers, it's like, hey, we don't think there is anything different that we could do at this point to like increase or to decrease expenses.
Sure.
Right. And so anyways, Peter, like I'm giving you the long-winded answer, but from an operations perspective, you know, we really look at, you know, top line revenues. What can we do to increase those? Or is there an opportunity to increase those just based on the comparables, right? That we've got in our comp set. And then from our operational experience, what do we think we can do with the expenses, right? So those are the two levers that we've got to pull, right? As like general, gross generalization, those are the two levers that we have to pull. And then the third way to add value is to rebrand the hotel, right? So if you are, say, sitting on a, I just toss out a random like brand here, like if you've got like a Hilton, right? Hilton's one of the top flags, right? Top brands. So you could maybe reposition it to a different Hilton, right? Like a different brand within the Hilton umbrella.
Sure.
Or maybe you make it a Marriott, right? Maybe Marriott gives you some incentives to bring it over to them. But chances are there have to be a really good story, right? Now if you can get a hotel and like bring it from like a choice hotel to like a Hilton or a Marriott, it's a massive win. Thing is, that doesn't happen too often. We normally see rebrands go down a tier, right? So we a lot of times we'll see like a Marriott or a Hilton become a Choice or a Wyndham hotel. And that's just because, you know, it's hard to reposition like a 20-year-old building into like a better flag. It's not impossible, and it does happen. And if you can do that, plus increase the operation, you know, increase operational efficiency, and obviously if you're repositioning the flag, like that goes hand in hand with the PIP. There's no way that you're going to rebrand the hotel and not go through a renovation, right? So though, if you're able to get a hotel where you can hit on all three of those metrics, like that's the grand slam deal. That's the grand slam value add. But there's a lot of risk there too. So like
I can imagine. I think there's a lot of costs too. Like they would want to require, if you're going to rebrand, like, you know, you got to do a lot of renovation and stuff like that to get it to that point.
Absolutely. Absolutely. There's
what does the brand do? I mean, what's like a, you know, what's the difference? I mean, like what value do they add? I mean, what do they do like from an operational standpoint? I mean, I'm assuming like obviously they have website branding and stuff like that. You know, like what do they do?
Yeah.
You know, and what differentiates Hilton from Marriott? You know, I mean, all that kind of stuff. Curious.
You know what? I think operators ask themselves the same that same question. What do these guys do anyways, right?
Yeah.
Because they normally take about 13%.
That was going to be my next question. You know, what percentage of the income revenue, I mean, do they take?
Yeah, so that's kind of split up between like the franchise fee and the marketing and sales line items.
Okay.
Kind of total anywhere from, you know, on the low end 9 to 10%. Maybe a little bit lower if you've got like a great deal with one of these like lower tier brands, and it can go, you know, as high as 14. I don't think I've ever seen 15%, but like, you know, 8 to 14% is kind of that range in total fees, right? When, you know, versus top line revenue. So it's usually like that. What value do they bring? Well, you know, frankly, they do bring a lot of value, right? They bring value because it's like anything else, Peter. You have to look at it and say, can I reinvent all of these things for the same price? And the answer is they take advantage of economies of scale.
Okay.
They've got hundreds, thousands, right, of hotels. And so the infrastructure that they've built is incredibly scalable and very profitable for them. But if we were to try and emulate the same, for example, reservation system, right? Marketing, all of these things, it would be a lot more than the 13% that we pay them. Now, as an operator, you have to ask yourself, well, shoot, how many hotels do I need before it makes more sense for me to bring all of these in-house? My original goal, Peter, was to start my own brand. And that is not something that has left my mind. But the truth is that I've learned the hard way, Peter, that it's better to learn from someone else before trying to reinvent the wheel.
Yeah.
So, for the foreseeable future, I'm only going to partner with, the top brands, Marriott, Hilton, and learn that system, right? Learn what it is that they're doing. The biggest asset that they bring is the brand loyalty and reservation system. I mean, when you look at when you look at who's crushing it right now, Bonvoy is the number one app, I think, in the world now. Number one reservation system in the world. And they're used it's not even close. Like Hilton's in second, but it's not even like a fraction of what. No, that's an exaggeration. It's close, but not really, right? And I don't know the exact numbers. I could look that up and whatnot, send those over to you. But the point is that why affiliate with a brand? Well, here's what I know. Well, let me ask you the question, Peter, right? Because you do a lot of travel. I'm assuming that there's one chain that you typically stay at.
Yeah, I would say, Marriott. And it was one of those things where I probably just grew up that way. I mean, my parents always would look to stay at a Marriott for whatever reason. I should ask them now why, but Marriott was always that brand. I mean, they would look for, you're going to Boston, you're going to, wherever, and it was just like Marriott. So I probably picked up on that a little bit. I usually now, for a lot of travel, I go to conferences, so whatever they have a deal with is where I stay. But I'm still that kind of guy. I mean, like Marriott's in the back of my mind.
Do you use the Bonvoy app, or do you use?
I think I do. Yeah, I think I do. And I know I get their emails. I know I have, because I know I get emails from them every now and again. Yes.
So there's your answer, right? So I think there's obviously the OTAs, right? Expedia, online travel agents, right? So there's Expedia, Priceline, all those guys, and the brands have deals with those OTAs, and a good portion of any hotel's business is going to come from those guys. But the brand contribution, and that's one thing that you want to look at when you're kind of looking to buy one of these things, is look at what the brand contribution is for this hotel. And I've audited enough financials to know that the brand contribution for Marriott is incredibly high. In terms of the percentage of bookings that come from the reservation system, Marriott's a lot higher than any of the other ones.
Gotcha.
And it varies by hotel, right? It's not like I could just say the brand contribution is always 30 or 40% or 50% or whatever from Marriott. It varies from hotel to hotel.
I would think maybe parts of the country too have maybe there's just more, the people are more in line to think, Hilton here or Marriott here. I mean, whatever it may be. Yeah, the brands are stronger in different areas, and then people, I don't know. I would just think that maybe, would work that way.
That's 100% true. And that's why it's really important to look at what the demand drivers are in the area and make sure that there's a market match to your product, right? I'm not going to open a a courtyard, a Marriott courtyard in a trucker town.
Yeah.
Right? Truckers, they would like, a lot of truckers like those comfort inns. They like, a lot of them stay, Motel Sixes, more economy kind of brands, right?
Yeah.
Versus, if it's a business, business heavy area, I'm probably not going to, want, oh man, I don't want to pick on anyone. I don't know. Like, I'm not going to pick like an economy brand, because business travel usually demands, a higher level of experience, right, within the hotel. So you're going to pick something that's at least like a limited service product, right? So you just want to make sure that the economic drivers for the area are in alignment with the product that you offer, or that the product that you offer has that there's going to be economic drivers that feed that kind of hotel.
Yeah.
Right. So
what would you say, what is your buy box? So what do you specifically look for, when you're looking for hotels?
It's so funny, man, because like everyone asks me that question, and I would say that the majority of the hotels that we look at are going to be limited service. Think Holiday Inns, think Courtyard, right? Those kinds of hotels, or extended stays, Residence Inn, like for example. And those are the majority of the hotels. The reason is because there's no F&B component, food and beverage. Sorry, forget sometimes, can't use that sort of slang. So yeah, F&B, food and beverage, right? There's no F&B. There might be breakfast for some of these hotels. In fact, a lot of them do have breakfast, which is just a massive money pit, by the way. And we're always trying to find ways to like improve our costs on breakfast, because some people really love it. Some people don't even use it. Like I don't eat breakfast, right? So like it's such a foreign concept to me, like hotel breakfast, because to be honest with you, every time I eat hotel breakfast, I get acid reflux. Like it's just,
I'm like, not a big breakfast guy. I know what you mean. I agree. If I'm like with people or something, a lot of people do, but I'm like I never eat cereal, but I feel like anytime I'm at like a hotel, like I'll grab one of those boxes of cereal and like maybe a banana or something, and that's it,
Yeah. Well, yeah, those continental breakfasts are actually fine. It's like the greasy bacon and like the half cooked sausage. I'm like, I don't want it. The fake eggs, right? I'm like,
the eggs. Oh my God, the eggs. The hash browns, all of it. It's just it's. You have to get like an omelet that's cooked, right there in front of you, like to be somewhat safe. I feel like anything that's in those metal, things that you lift, the warmers are, you're running a risk.
100%. So it's foreign to me, but I know that a lot of people like, it's funny. A lot of my friends, when we talk, and I would encourage people, if you're whatever business you're in, I always poll people. I think like that's one of the things that like my friends know. Like I'm sending out polls like weekly. Like, hey, what do you think of this? What do you think? Like, give them a couple of polls, like options. And I've got like a cohort of like maybe 20 to 30 friends, that like that's just like they're my sample group, right?
Yeah.
So they they give me feedback in real time, and so breakfast was a big thing for my
they liked it or they didn't. It wasn't.
Yep. No, they did. They did. Yeah.
Okay.
It was a big deal for them.
Yeah.
So
if you got kids and all, I mean, I could see that. I could believe it.
Yeah.
Or you're there for a conference or something, it's just
exactly. And so, I guess the reality is that a lot of people like the breakfast, right? And so, but it is a money pit. Limited service, extended stays primarily, and the type of hotel that we're going after right now matters less than the situation seller's in. We're really looking for hotels that are in some type of distress. It's the market right now. There's a ton of opportunity out there. And I believe, Peter, and your investors should know this too, that I don't think that there's going to be a better time in the next 10 years to make investments than right now.
Does it have a lot to do with it riding off of COVID and what happened there, or like what do you think the catalyst is, or what's creating that time frame right now?
It's the rate market. It's the rate market and what that's doing to commercial real estate owners. And this isn't just unique to the hotel sector. This is something that's going or happening, in all of the, basically not all of them, but like practically all of the different commercial real estate sectors.
Yeah.
And because of that, we are seeing a lot of potential sellers, right? Or ownership groups that are in a bit of a pickle because these commercial mortgages are nothing like residential mortgages. They're variable or they're short term, usually 5 to 10 years. And so you've got a lot of variable loans as well as 5 and 10-year loans that are coming due right now. And when you look at what the rates were when they originated the loans versus today, the seller was thinking, hey, 5 years from, in 2020, when they bought this thing, or 2015, when they bought this thing, they were thinking, oh, I can refinance the property in 5 years. And in fact, their business plan looked a little something like this. We're going to increase revenues, right? We're going to increase NOI, and the hotel value is going to be like probably 30 to 40% more than it is what we bought for, maybe 50% more.
Yeah.
We'll be able to refinance the property.
Yeah.
And pull out a bunch of cash, and we're going to be rich.
Yeah.
Well, didn't happen that way. Right?
Yeah.
Now they're in a situation where the hotel is barely appreciated, if not gone down in value.
Yeah.
And then they have to refinance at a rate that's double what they paid, what they had in 2000.
Yeah, you're just digging yourself further. Yeah.
So now they're in a situation, Peter, where they have to sell, because they can't afford, like the bank's not going to give them favorable terms on this student loan. And most of them are not even, like, most of them can't even qualify for the refinance. And if they do, they have to bring cash to the table. So instead of pulling money out, they have to do a capital infusion. Yeah. So try doing, have fun with that. Go back to all your investors, do a capital call.
Yeah. And I would think, like you said, that PIP pressure is on them too, because now time's gone by and it's kind of around the corner. You said every 5 to 7 years or 7 to 10 years. So
every 7 to 10 years. And again, so the thing is, Peter, is that the banks and the brands are playing the same game. It's the delay and pray game, right? So we're just delaying.
Yeah.
Hey, take another 6 months, take another year. And the banks are doing the same thing with the operators. But if one thing has been made very clear, I think over the last couple of months now, Peter, is that the rates aren't coming down anytime soon. I think that we can confidently say that now. And I think people thought, oh, maybe with the new regime change or this or that, we might start seeing some movement in the interest rate mark. I don't know that that's going to happen. Now, I could put my foot in my mouth and 6 months from now, we have a totally different situation and the rates come down significantly, but I don't know. I mean, what do you think, Peter? Like,
I don't know. I'd rather be conservative in that sense. Than make decisions based off of, it's going to come down. That would be. I'd rather be wrong about something like that. Than be and be over conservative than make bets on it's going to come down. Because you just don't know. With the new administration, I think there's a lot of people are very hopeful, and the overall mentality has been very positive, from a business perspective, right? So, but there's a lot of things there's a lot of uncertainties there too, with spending and how it could affect inflation and interest rates and stuff like that as well. So it's not a bet that I would want to make right now that, they're definitely going to come down, and I then make decisions based off of that. My decisions are being made that they're staying higher for longer, and if they do, then great, but if they don't, at least I'm not going to get burned.
Well, I think that's the pickle that a lot of the banks are in right now, is that they put a hold on making decisions. And I think that 2025 is going to be a year where a lot of these lenders decide to find a way to get the seller to, pay the note.
Yeah.
Either by, via a sale. And this, it's a tricky time, man. It's a really tricky time. I don't envy anyone that's in the position. It's people are going to lose in this market.
How has demand been?
Unfortunate.
I would think it's got to be up since COVID, obviously, where people weren't traveling and things like that. But is it, because I obviously play in the residential space, and I look at, where the markets were at, where they are versus, from a supply perspective, pre-COVID, and we're fortunate to be in markets that, we still see 50% less inventory on market today than there was pre-COVID. I'm curious, and that's not the case everywhere. You know what I mean? There's certainly markets from a single family residential perspective that are 50% more inventory than they had pre-COVID. Especially like Florida, markets that saw a ton of migration and therefore a ton of development, so they brought a lot of new product online. We're fortunately in markets where it wasn't that case. There hasn't been a lot of new development. So I'm curious, for hotels, you'd think, okay, people are I feel like a lot of people are traveling now more than ever. You know what I mean? Like, and they're making up for, this pent up, where they didn't do it maybe during COVID for a few years and things like that. And to your point, there's not a lot of new hotel supply coming online. You know what I mean? So I'm curious to, obviously have Airbnb making pressures and things like that as an alternative. But I feel like a lot of the data I hear is that's kind of drawn back, and people are gone back to those brands, they grew up with and that they trust on the hotel side and also. I'm curious to what you see the trends are. How has demand been, and where do you think that's going to go moving forward? Obviously exceeding any crazy events and things like that happening.
Demand right now, gauging demand from a macro level is actually very difficult to do because the macro trends I don't think really speak to the reality that individuals are facing in different markets, and so it's very very market specific, Peter.
Yeah.
Because there are some markets that have rebounded incredibly well, and then there are some markets that are completely dead. So market like, for example, Nashville is crushing right now, dude. Like the demand, like it's never been higher.
Yeah.
Right.
Heard that, yeah.
And then you've got markets like Denver and San Francisco that relied heavily on business travel, and the business travel has not picked back up. It hasn't gotten back to the point. So those hotels are struggling right now. And so it's important to look at two things, right? It's important to look at what were the demand drivers pre and post COVID. Like, what were the demand drivers pre-COVID? Have they gotten back to where they are right now, right? And then what were the demand drive? Like, are there any additional demand drivers that have been created since COVID happened? Because there are some markets where like COVID actually changed the economics,
sure,
right? Of the and just like it just changed the city.
Yeah, just the dynamics of that local market are different now. Yeah, that's awesome.
Exactly. So it's hard to say. Now, that being said, leisure travel as a whole is down right now. And I think that's just because of the reality of like people are not doing as well financially right now as they were a few years ago. And that's just across the board. Business travel, since COVID has started, it's picked up more and more year over year. And we're seeing a lot of, some markets, not a lot of markets, but some markets where business travel is back up to where it was pre-COVID, right? Like I was looking at a deal in New York City, and the business segment, because each hotel breaks down their occupancy by segment. So they actually like kind of measure, a lot of these branded hotels measure like where the guests came from. And so we'll see like, hey, like business travel was actually exceeded what it was pre-COVID. But there are some hotel, right? So it's market and even sometimes property specific. The question is, as an operator, what can we do to take the the market that's currently there, right? For that hotel, it was obvious, hey, the leisure was down, but business travel was up. So it's like, hey, can we create a business plan that's going to capture more of the business segment, right? So that we can make up for the lost leisure, leisure clientele, right? So there's a lot of different things that you could think about there, right? And yes, you can get tactical like that in the hotel space, right? Like, and I would encourage people, like, partner with operators that think tactically like that, and don't just say like, hey, we're going to run the same play that we've done the last 10.
Yeah.
Because that's how a lot of the bigger guys do it. And no knock on them, right? No knock on them. I would love to be them one day, right? But for now, what's the value of partnering with someone like me? It's there's a more boots on the ground approach.
Yeah. That's really great insight, from a macro micro perspective, because I think a lot of LPs and passive investors and fund to fund managers and things like that look at things at such a macro kind of perspective, and that can drive certain decisions. But I feel like real estate is so many types of real estate, if not every type of real estate, the micro is extremely important. And sometimes it doesn't, the macro kind of trends don't necessarily give justice to, like you said, there's some markets that are up, there's some markets that are down, there's some markets that the dynamics have changed, and others, it's evolved. And so I think it's really important to look at things that way and not just write something off because of some article you read that's summarizing, the entire nation or something like that. I mean, there's differences, and there's drivers in each market that make certain investments good and others bad. And, so there's a lot more to think about that. And I love what you're saying about, one of the benefits to working with somebody at your size versus somebody else. Because I feel like there's a lot of times there's investors that feel confident just in the sheer size of a company, and there's something to be said for that. But a lot of times it's like, chances are they evolved this to the market and how to succeed in this market the same way that somebody who's been created out of this market and has seen it from a different perspective, that's some of the questions that I always ask for those companies that have been around for a long time, because that can actually be a weakness, to some degree at their size. And when you look at data and all, it's just typically larger companies tend to make a smaller return, overall, because of the size of it and just what it takes and all that kind of stuff. So I think that makes a lot of sense. Man, this has been an amazing conversation. It's been like a master class in hospitality. Something that's always fascinated me that I haven't a lot of time. I haven't done a lot of time. I have a good friend who does a lot of it. But this has been really good insight, really good information. I appreciate you, sharing all this, and I'm happy that I asked you for the long form answers here, because I think they really took us somewhere, and have provided a ton of useful information for anybody interested in the space, and whether they're investing in it or not. I mean, this has been a great conversation around it. If people want to find out more, they want to learn more about what you do and all that kind of stuff, how can people get in touch with you, Danny?
Yeah. So Peter, I'll give you a couple of things here. So you can link them to my website. That's goldcapitalinc.com. And I'll give it to you so you can put it in the show notes or whatever. And that's the best way for them to reach me. They can also find me on YouTube. If they just search my name, Danny Gould TV. So my full name, TV, that's the name of the channel. And they can always just call me or text me too. I'll give my personal cell phone out to you guys. It's 408-531-7654. So if you've got any questions about hotels, hospitality, want to make, private investments into those sorts of into those sorts of assets or into that asset class, like, I'm more than happy to chat with you and see if it's a good fit, right? So those are the three ways that they can get a hold of me.
Awesome. And your last name is spelled Gould for anyone that's listening. Yeah, they might type in GOLD.
LD.
As somebody with the last name Neil, I constantly see, I go on podcasts and things like that, and it's spelled Neil. And you'll probably find it eventually, but it's always, it's like, couldn't even get my last name right. So you might share in some of that frustration with me with a last name like Gould.
Oh, 100%. It's very commonly misspelled. Almost everyone when they read my name for the first time says Danny Gould.
Sure.
Right. And for a while I thought about changing my last name to Gould because I was just like, people mess it up so frequently.
Yeah.
But heritage, pride, all that stuff, I couldn't do that.
Yeah.
But yeah, Gould, Gould, like Ellie Goulding, right? Gould, Goulding. So Danny Gould.
No, I share in that frustration. It was one of the reasons I said it, because I want to make sure people get it right, because I share in that, and it's fresh in my mind because it's something that just happened the other day. But I used to work at a place where I had both emails. You know what I mean? Like it's like P. Usually my email is P Neil, and I would have P Neil with 2 L's and P Neil 1 L, and I would check them because every couple weeks and couple months, emails would float into that 1 L box. It was just like, I'm all over that. And I even thought about adding an O in every now and again too, because you get a lot of O'Neills as well. You know what I mean? So it's that's another thing that we have in common. But Danny, this has been awesome. I really enjoyed this conversation, and I encourage people to reach out to you, and I appreciate you being here. And this was great.
Awesome, man. Yeah, no, I had a blast, and looking forward to the next one.
Awesome. Cool. Right.